Welcome back. Here's a look at shares of Lowe's in the pre-market trade. You can see the stock is declining by about almost a full percentage point, or $1.94. This comes after the shares were rallying earlier. The company has topped sales and profit estimates in its latest quarter this morning, despite a drop in sales. The company is also sticking by its full-year forecast. Let's bring in Scott Mushkin. He's a founder and chief executive officer of R5 Capital. Scott, thanks a lot for joining us. This company and stock gets a lot of attention. Things have not been easy for either Lowe's or Home Depot for a while now. We are seeing, I gather, again, another drop in same-store sales at Lowe's. How would you assess these results?
So, I mean, you always got to look at what Wall Street was expecting. You know, it looks like with the stock up a little bit, expectations continue to be pretty tempered for this company. I think the challenge when you look at Home Depot and Lowe's and the interest rate environment specifically in the U.S., which leads right to mortgage rates and home equity loan rates, I think the outlook, continues to be uncertain. Part of that uncertainty, and maybe the bias would be towards the upside, and this hurts their demand. And I think part of it is you got to look at the fiscal situation in the U.S. We commented on a lot over the last year, and we think it's going to sustain higher interest rates, which suppresses demand for housing and housing-related goods.
I want to correct something that we showed our viewers at the beginning of this conversation. Those shares are up in pre-market trading today. That was a mistake in our board that we showed. There's a look at Lowe's in the pre-market. The stock is up 3%. At what time, Scott, does the market look beyond the declining same-store sales to an upward trajectory?
So, I mean, I think the next year, 25, is when a lot of people are expecting a turn, even at the end of this year. I mean, the remodel activity, though, I think is going to be challenged all the way through 24. We obviously have a big election coming up. So I think people are looking at 25 and what 25 will bring. The good news is a lot of the extra spending that happened with the pandemic, it looks like we've worked through that a lot. So I think then the challenge is interest rates and where do interest rates go? And of course, the lack of supply in housing. So we're looking for a bounce back next year in same-store sales for both Home Depot and Lowe's, but maybe not to the degree the street is looking. And so our earnings estimates continue to be below the street expectations. Just think that the growth rate here is going to be a little slower than people want it to be, even though there's a lot of home equity. But we're concerned that it's just going to continue to be tied up inside the houses given rates.
Scott, how does valuation on Lowe's weigh into your decision making on the company? I mean, I think it trades at over 19 times forward earnings, and given the weak same-store sales, which you touched on, seems like a bit of a premium valuation. Does that sort of factor into your thinking on a negative view on the company?
Yeah, I mean, that's actually a good question. And Lowe's doesn't seem as overvalued as Home Depot. But we do look at kind of the PEs and the EV/EBITDA, but we also look at our DCFs. And the challenge we have with both companies is that the DCF is pointing to a lower number. And if you look at margins at Lowe's, but also this applies to Home Depot, maybe even Home Depot a little bit more, where people think margins can go on these companies and where they may end up, I think is maybe a little bit different. The environment, again, on wage rates and just competition in the market. We ran, and Lowe's faces this competition. But what we said is we compared Amazon versus Lowe's with tools. And Amazon continues to press pricing down throughout retail. So that's a factor here which we think will keep margins suppressed for both Lowe's and Home Depot, but Lowe's a little bit more.